website, we do have the economic calendar here. Before we start looking on the news that is coming up, let's look at what has happened. So on where is it? Let me find it. Okay, on Tuesday here. So Tuesday early this week, we had the Canadian GDP number was minus 0.5%. It was expected to be a 0.7. It came out as expected. GDP was month on month was 0.7%. Canadian GDP year on year went from 0.3. This was during the whole virus situation, lockdowns and all that was happening. Last year was 0.3. Now this year year on year for second quarter is at a 12.72%. So we see a big swing, a big change in terms of GDP number for the Canadian, and quarter on quarter it just dropped a little bit, went from a 1.4 to a minus 0.3% here for GDP. So with that in mind, what you should gather is that in the general scope of things, the GDP number looks like it's getting better for Canadians, right? It's gone from 0.3 to a 12.72 on a year on year. Month on month, it has improved. Just on the quarter, it's dropped a little bit. With that in mind, what could happen from today onwards, being Friday and non-farm payrolls, is we don't see a lot of Canadian news here. We only have to pay attention to the US unemployment rates, which I've told you about, expecting it to stay at a 5.2%. Non-farm payrolls, as Kim Hong was sharing, and we've been talking about it, we might be looking at this at about a 600, maybe about a 600 number, maybe close to a 750 number. So doesn't look like it's going to be a super number. Bear in mind, it could be a super number. It's almost impossible to predict the non-farm payroll data, but our best guess right now is we're preparing for the bad case scenario where it comes out at, as 600 plus data. And then average hourly earnings month on month looking to go from 0.4 to a 0.3, a slight drop, but I think in this case, it's not going to have too big of an impact on the prices if it comes out at 0.2 or 0.3, unless it comes to a 0.1 or even a negative number, then we're going to see significant moves for the US dollar. So putting all that together, we're looking at some very good GDP numbers for the Canadians. We're looking at not a lot of big changes in the US non-farm payrolls, or maybe even some possibly weaker numbers here. What this all could mean in terms of the USDCAD chart here on the H4 timeframe, the Canadian chart on the H4 timeframe. Last week when I spoke about it, I said it was going to come down, test this 1.2613 level. The good and the bad thing is that it's still, for this whole week, it's been sitting right at this 1.2613 level. It's broken down a little bit. It's broken down a little bit slightly because of OPEC, but you can see that in the scheme of things, it's only about a 50 pip move downwards. So what I could anticipate at this point in time is that we're more likely to see the Canadian sit across or maybe even climb up a little bit, and then towards the non-farm payroll number as it's being released, if we do see a bad news on the US non-farm payroll number, I'm anticipating it to look a bit like that, where it sits across, it probably tests that 1.2613 level before a weaker US dollar could push it downwards towards that 1.2456 support level. So what this means is I could have a lot of other trade opportunities, but on the US CAD, I'm looking at a possible selling opportunity at about 1.2581. Below 1.2581, you could be looking at maybe even a 50 pip stop loss for a very good 100 pip take profit level towards the downside, 1:2 risk reward ratio towards the downside on the US CAD, given that we see that slight weakness in the US dollar. With that said, there are also, as I'm going to scroll through very quickly, there are also a lot of trade opportunities, probably tonight, leading from the non-farm payroll